So Tesla posted its second quarter vehicle production delivery report for 2023 on Sunday. Here are the key numbers for the electrical vehicle maker. Total deliveries for Q2, 466,000 deliveries in the quarter. Total production, 479,700 for good old Tesla Mazda. The numbers beat analyst expectations and indicate, and we'll show analyst numbers in just a moment, and indicate that Tesla deliveries rose 83% year over year for Tesla after Elon Musk auto business added manufacturing capacity and ramped up production at its vehicles assembly plant in Austin, Texas. 83 flippin' flapjacking percent growth year on year. 83%! That's insanity for deliveries to be up that. Who else is posting those sorts of numbers in the auto category? I can tell you who. Absolutely nobody. Ridiculous, okay? I mean, these other automakers are barely trying to even break even with their businesses right now. And here you are, Tesla just trucking along and posting 83% growth year over year in deliveries. Oh gosh. And I mean, the numbers last year were insane, that Tesla had posted, right? Like the numbers in 2022, especially in these quarters we're having a comp against year over year, they were ridiculous growth. And now you get this and it's like, you got to be flipping my flapjacks. And here's the most amazing part of this, okay? Here's the most amazing part. Look at this. This is interest rates on 16-month new car loans in the United States, right? And this basically covers about the last decade or so. And here we are at a moment where interest rates are far and away higher than they've been any time in the past decade, if not 2 decades. And you've got Tesla putting up these sorts of results when interest rates really around the world have shot up like insane over the past, let's call it 12 to 18 months here. Absolutely incredible, okay? Tesla groups deliveries into 2 categories, but does not report individual model or region-specific numbers. The second quarter of 2023 marked the 5th period in a row when Tesla reported a higher level of vehicles produced compared to deliveries. During the second quarter of last year, Tesla reported 254,000 deliveries, and in the first quarter of 2023, Tesla reported 422,000 deliveries. During the second quarter of 2022, Tesla produced 258,000 vehicles, right, in 2022. Now they just, produced 440, right? And it's just insane growth on a year-over-year basis to be posting these sorts of numbers, just absolutely ridiculous. Deliveries are a carefully watched number by Tesla shareholders as the closest approximation of sales disclosed by the company. Absolutely. I mean, if you know what Tesla's basically delivering for a quarter, you can figure out, not to the exact penny, but you can figure out very, very close, within a couple percent, of likely what Tesla's basically doing for revenue, because ASPs aren't rocket science to kind of figure out those. Wall Street was expecting Tesla to report deliveries of 445,000 for the period, right? And so 445,000 was the expected, right? And company obviously came in with 466,000, right? So I mean, we're talking about, as far as deliveries go, you're talking about an over 20,000 vehicle beat. Now, when your vehicles are, let's say, $40,000, $50,000, whatever ASP you want to run on, I'm just throwing those numbers out there, right? I can tell you over $20,000 or over a 20,000 unit beat when you're selling products at a $40,000, $50,000 is a lot of revenue. You can go ahead and run those numbers, okay? It's a monumental number, okay? The independent researcher who publishes under the handle Troy Tesla-like was expecting deliveries of 448,000 in production of 471,000 vehicles, right? So clearly they beat on both those metrics for what Troy Tesla-like was basically kind of expecting, which, by the way, I do follow him on Patreon. I think it's like $5 or $10 a month or whatever. And I kind of, take a peek at what his, production numbers or deliveries. And he's pretty good with his numbers, right? But even he was off. Even Troy was off in regards to this one, right? He was expecting deliveries of 448. Company came in at 466. And so, I was looking at his numbers and I was kind of like, maybe this is not going to be such an exciting quarter. And then they come in and they blow away even his numbers. So, I mean, I'm going to still stay part of his Patreon, obviously. I like being part of that. The only better Patreon, obviously, in the world to be part of is mine, because you get to see all the moves I'm making in the market. But, that is what it is, okay? Now, look at this here. It's very important. Piper Sandler senior research analyst Alexander Potter, wrote in a note on June 26 that according to the firm's analysis, prices have been stable for Tesla during the second quarter on balance. The company's steep discounts in and beyond China in the first quarter sparked cries of a price war in the electric vehicle market. Potter cautioned that price cuts in Q3, if any, could reignite concerns about margins, for sure, right? But here we are in a moment when Tesla looks like, they're going to be able to keep prices stable. I mean, we'll see how the economy fares, but if the economy stays decent, there's also a potential here, folks, that Tesla could start going back up on some prices in the back half of this year, which would obviously increase margins, okay? And so this is just something important to kind of keep in mind here. And I can tell you, when you're posting numbers like 83% growth year over year in deliveries, Tesla doesn't really need to lower price anymore. It clearly looks like they've got more demand than they could ever know what to do with. When you report 83% growth on a year over year basis, dude, you're doing the insane numbers. And the next thing I think about what happens when Cybertruck hits. We know Cybertruck's going into production in the back half of this year to some sort of extent, right? We don't think it's going to be at mass production until 2024, but we know this is going to go into some sort of production. And the question is, with this baby ramping up in a major way in 2024, what type of supercharge are we talking about, no pun intended, for Tesla's numbers here, okay? I mean, because this is going to be absolutely insane. I think Cybertruck is still lost on a lot of people in regards to Wall Street, and they forget that this is the most talked about vehicle in the history of mankind. We've never seen a vehicle get this much buzz and excitement and talk about when this vehicle obviously was shown off, right? I mean, everybody and their grandma was talking about Cybertruck and, I don't know about that thing. What did Elon do? They busted the window. It looks crazy, this and that, right? And so it's going to be fascinating to see what that does for Tesla's numbers overall. And I can tell you, when you're already posting these sorts of numbers and you're going to add this fuel to the fire, what a time to be a shareholder of Tesla, okay? Tesla's profitability metrics. This is a trailing 12-month revenue over time, right? Trailing 12-month gross profit over time, and their gross margin over time, which, I understand we're not at the peak anymore, right? But we could certainly get back up there again, right? And other thing to recognize is this company used to have gross margins of, kind of in the 15 to 20% range, and now they're obviously significantly over 20%. We've seen a steady rise in Tesla's profitability metrics in recent years, as Tesla optimized the production of the Model 3 and other vehicles. Its gross profit margin nearly doubled from a low of around 14% to a high of around 27% in early 2022. The recent decline in gross margin is likely due to the transitory, challenging market conditions and competitive price cuts, not a Tesla-specific problem. 100%, I agree. Despite the transitory drop in Tesla's profitability, its gross margin should recover and return to exceptionally high level of close to 30%. Moreover, let's discuss how profitable Tesla is compared to other automakers. And yeah, I can definitely see Tesla getting back to 30% type gross margins. I think it's a potential that they could get even higher than that, especially if their services business really grows out to be a beast over this next 5 to 10 years. Okay? Now, in the short term, obviously with kind of macro conditions a little, let's call it weaker, especially on a global scale, and ramping a new vehicle, which is going to be Cybertruck when we're talking about that, obviously, right? I think gross margins still won't be the most exciting for the remainder of this year. I think we could start seeing a nice tick up in gross margin starting in 2024, though. That's my opinion. That's my belief. If Tesla provides EPS of $6 to $7 next year, its stock is now trading at a forward PE ratio of 34 to 40. Moreover, and here's a way to think about that. If they're trading at that sort of forward PE, right, that's about, let's call it double the market roughly. Well, let me ask you this. Do you think Tesla's going to at least 2x the average revenue and earnings per share growth of an average public company over the next few years? You should say yes, okay? Yes, they should. That's pretty in the bag. The bigger question is, do they 3x, 5x, 10x an average company's revenue growth and earnings per share growth over the next 5, 10 years? That's a real question. And so to pay a 2x valuation, I don't think is crazy whatsoever. Moreover, if Tesla declines to about $200, we may be looking at a stock trading at a forward PE ratio below 30, making Tesla shares appear inexpensive again. Furthermore, if we consider 2025's earnings power, $8 to $10 implies the stock is now trading at a 24 to 30 2025 earnings per share. Likewise, if Tesla declined to $200 buy level, the stock may sell at approximately 20 to 28 2025 earnings per share. Okay. Now, let's look at what this gentleman believes Tesla's stock price is going to look like in future years, and I'll tell you how realistic or not realistic I think these numbers are. Okay. So this gentleman has basically Tesla's stock price being 240 this year. Next year he's got it being 350. 2025 he's got it being $480. 2026 he's got it being $627. 2027 $800, $930, just over $1,000 in 2029, and then $1,200 in 2030. So first thing I'll say is I think these numbers are I think they're actually fairly conservative. I really do. I think they're actually fairly conservative. Okay. I want to push the two numbers I have a problem with the stock price wise in terms of I think he's too low with his numbers. Can you guess them? Can you guess them? Okay. What I believe, and this is assuming there's no sort of economic crash or something like that and the economy just stays at least decent over the next couple of years. I think his 2024 and 2025 numbers are too lowballed, in my personal opinion, okay? I gotta say, seeing how well Tesla's held up in a very tough environment, and I do believe personally that Tesla has taken as much margin hit as they'll take in here in 2023, and I believe you're going to start to see margin expansion again next year. So when you see what Cybertruck starts to put up for numbers in 2024, and when you see their margins start to expand again in 2024, which I believe is going to happen, I believe the stock will start to be respected on a much higher level. And so I wouldn't be surprised at all, as long as the economy is decent in 2024 and 2025, if the stock price doesn't rally quite a bit more. Am I going to play calls on it? Probably not. But I wouldn't be surprised at all. Let's just put it that way, because those are two massive, massive things for the company.